Also on the program, he's one of the world's most respected economists and has stepped down as the governor of the Bank of Israel. We'll hear Stanley Fischer's outlook for Israel, the Middle East, and the global economy. From famous global brands to small startups, the global financial crisis has impacted everyone. It now looks like the global economy is stuck in neutral. That's the word from the International Monetary Fund, which just cut its global forecast for the third time this year. The previous growth forecast was 3.3%, which was already lowered from January. But now the IMF is saying that figure is to be reduced again to just above 3% due to the state of the world economy, in particular the emerging markets. The news could come as a slight blow to some countries here in the region. Only in June, the United Arab Emirates and Qatar were both upgraded from frontier market to emerging market status. While there are concerns about emerging economies, the outlook is brighter for developed economies. Israel is the only Middle Eastern country with developed nation status and is holding its own in an ever-changing region. Despite being rocked by protests last year, Israel has managed to avoid the economic fallout of ongoing unrest both at home and across its borders. According to the World Bank, Israel's gross domestic product grew to $242 billion in 2011. One of its key drivers of growth is technology. It's got its own version of Silicon Valley, known as Silicon Wadi, where many international tech companies operate. In fact, high-tech products account for about 40% of the country's exports. The IMF predicts growth of 3.6% this year and just under 4% in 2014. Israel's unemployment rate stands at just under 7%, and that is far lower than other rates, of course, in the region. One thing that is holding back Israel's economy is the lack of a peace agreement with Palestinians. That's according to Stanley Fischer, the former central bank governor. Fischer is one of the world's most respected economists. He was the first deputy managing director of the IMF for 7 years and a chief economist at the World Bank for 2. His former students include U.S. Federal Reserve Board Chairman Ben Bernanke and European Central Bank Governor Mario Draghi. At the end of June, he stepped down as the bank governor. He's credited with bringing stability to the country's economy during the global financial crisis. But what is he most proud of his time at the central bank? It's a question Fanula Sweeney asked Fischer when she caught up with him in Tel Aviv.
Well, there were external challenges and there was some internal with the Bank of Israel. The external primarily was that we came out of the global crisis pretty well. We had a short recession and we started growing very quickly. Our banks didn't get into trouble and the economy continued growing rapidly within a year after the crisis. So that was very successful, required some management. Internally, I had wanted to change the law of the Bank of Israel, and we got that done. It took a mere 5 years, but it happened, and I think the bank is now less dependent on who the governor is, more stable from the viewpoint of what policy is likely to be, and more likely to be a stabilizing influence on the economy.
You're on record in the past as having said that if there were peace with the Palestinians, that it would give a dividend to the Israeli economy. Is that something Israel needs, given that the economy seems to be growing quite well despite the lack of a peace agreement?
I believe that the major benefit from reaching an agreement with the Palestinians would come not from direct trade with the Palestinians or even possibly from direct trade with the rest of the Arab world, but from reducing the level of uncertainty about what the future of this country holds. We own more foreign assets than foreigners own in Israel. That is that this relatively small country, in fact, invests abroad more than people invest here. That partly reflects the fact that people do want to have some of their wealth abroad, and they're not investing here. I think we'd get much more Israeli investment in Israel, and we'd get much more foreign investment in Israel, and the economy could grow significantly faster as the security situation changed.
And where do you think Israel's priorities should lie internationally in terms of trade? Should it be looking to the northeast, to China? Should it continue to look to the west, to Europe and the United States?
Well, we need to increase exports, and we export about 65% of our exports go to either Europe or the United States. So those are the major markets. They'll continue to be the major markets, but it's clear we're not going to get rapid growth in exports out of those markets in the near future, and there is a move already underway towards Asia. There's actually been a couple of months recently in which our exports to Asia were for the first time larger than those to the United States. That never happened before.
Is there anything for your successor to be concerned about as he takes over?
Well, there's a developing one, which is the global economy is slowing down, and we're very dependent on the global economy. My successor will have to deal with an economy that is facing more headwinds than I had to face most of the time, except during the Great Recession.
You left the job at the beginning of July. You've had a couple of weeks now. What are your intentions?
I don't know, and I won't know for some time. We'll look around, we'll figure out what the possibilities are. I don't know where we'll live. We're going back to New York, where we have an apartment, but that'll be where I base my search on, our search, and then we'll see.
Fionnuala Sweeney with Stanley Fisher there, the former first deputy managing director of the IMF and, of course, the governor of the Bank of Israel. Israelis and Palestinians went back to the bargaining table this week. U.S. Secretary of State John Kerry hosting Tzipi Livni and Saeb Erekat in Washington after a 3-year hiatus on those peace talks.